This billing process, so as you can see the PPT of the billing process. So this billing process I already discussed yesterday. So how the policy is flowing to billing center. Okay, so again I'm saying like at first we need to create the account, then after we need to create the policy, then policy flow to the billing center, then after we need to make the payment, and that payment will go to the insurance company. Okay, so insurance company is called as a insurer, and the customer is called as a insured. So insurer and insured. Insurer means the company which is providing the insurance, and insured means the person, yeah, the person who is taking the policy.
Okay, person, or it can be organization also, right?
It can be organization, but one for particular scenario, it would be organization. So I will tell you. Okay.
Okay.
So like this Guidewire is generally for PNC, so property and casualty. So property and casualty like two types. One is personal, other is commercial. So like personal auto, commercial auto. So personal auto means it would be for one individual person. Correct. So that's why I told you like it would be for insured means one person. And for organization, there is one separate type of billing. I will explain in this PPT in this session, so it will be clear to you. Okay. Yeah. So whenever we are creating the policy, so the insurance company also has a called as a carrier or insurer. So the data is flow from policy center to billing center, and billing instruction works as a bridge here. Billing instruction will be having all the details. Okay. So the integration between policy and billing center is done through the billing instruction. Okay. So this is the billing instruction you can see. So it works as act as a bridge from policy center to billing center. Okay, so policy center is here, billing center is the downstream. Okay, because the policies flow from policy to billing. Okay, now in billing center, invoice will be created. That invoice will be linked with the account. Okay, not with the policy. Yeah, but invoice will create for the policy, whatever the policy we are creating, because policy having the premium amount or charges. Correct. Until unless we are not creating any policy, invoice will not create. First step is to create the account. So first we need to create the account in policy center. Account will be having all the detail like address, name, who is the primary contact, who is the primary insured. Every detail will be having, account will be having all detail. Then after we need to create the policy. Policy like for this personal auto policy or commercial auto, what is the coverage for that policy, how much will be the premium amount. So every detail will be in the policy. So once the policy is created, then only invoice will be created into the billing center, because charge will not flow until and unless charge will not create, invoice will not create. Okay, but in the billing center screen, when you go to billing center, when I will show you the billing center UI, when you go to UI, this invoice will be attached to the account. Now one account may have one policy, two policies, so all the invoice with respect to all policy you can see into the account screen. Okay, that's why here it is indicating invoice is linked with the account. Okay, then after commission is there. So commission, as I told you, like there is a direct commission, indirect commission is also. So commission will be calculated as per the commission rate. So in billing center, when you go to the commission screen, there will be commission rate mentioned, like 8%, 6%, everything will be there. So if it is mentioned 8%, so total premium amount, 8% of total premium amount will be the commission, and that commission is given by the carrier or insurance company, not through the policy center. Okay, clear this one or any question?
So commission is not done through policy center, it's directly given by the insurance, is what you say, insurance company.
Yeah, so yeah, till now just remember by the insurance company, I'm talking about direct bill. There is also one more agency bill. Agency bill scenario is different. So if you are doing direct bill, most projects are, or 90% project will be direct bill, 10% in the agency bill. So if the direct bill, there is no any involvement of billing center to make the commission amount. Only commission rate will be there, like 8%, 6%, and whatever the amount will be there in showing into the screen, that amount will be paid through the insurance company, paid by the insurance company.
Yeah, okay. But if there is a direct client, to whom will the insurance company pay the commission? There's no agency involved.
No, yeah, agency will be there. Yeah, I'm saying direct bill, agency bill. So for direct bill, agency name will be there, rate will be there. Only amount will be paid through the agency company, it means insurance company. Okay, direct to that producer to whom it is mentioned. Every policy is linked with one producer. Every policy, each and every policy should be linked, whether it is direct or indirect. Okay, so if it is direct, so what would happen? Only invoice will generate, and we need to make the payment for the invoices. Now, whatever the rate is there, that according to that rate, insurance company will make to the amount to the producer, but externally, not through the billing center. Okay, that is direct. And for indirect, so if you are creating indirect policy, so for that, instead of invoice, statement invoice will generate. Here you can see below it is written statement invoice. So this invoice will be for producer, not for the insurer, like insured invoice. It will be statement invoice, and that invoice having all the amount, charge amount plus commission of the producer. So both amount will be merged. Now from billing center, we need to make the payment because this is the agency bill policy. Okay. Okay. So again, I will come there. Don't worry. I will show the screen also through UI also, so it will be in your mind forever. Like right now, just remember two type of policy: direct and agency. For direct policy, direct bill, one invoice will generate, and invoice will be for premium amount. And for indirect agency bill policy, statement invoice will generate, not invoice, and that statement invoice will be having policy amount plus the commission, whatever the commission. Okay. Yeah. So here I have mentioned, so three types of method are there, billing method. You can see direct bill, list bill, agency bill. Okay. So one by one I will go through direct bill. So what is the meaning of direct bill? As I told you, 90% project will be on direct bill, only 10% or very less project is on agency bill. But sometimes we need to work on agency bill also. But agency bill will be the OOTV. Do you know OOTV?
No.
Okay, there is a term which will be using frequently in your project and everywhere. OTV, out of the box. Okay, so out of the box means whatever whatever the Guidewire has been given the code, base code, it is called OTV code. Okay, so maximum time, maximum client will for agency will they will accept the OTV code. They will very less they modify or do customize. Means very less requirement. Direct will we will see lots of changes, lots of customization, so lots of requirement. So you need to create a story card for the requirement, and developer need to do the development task. Okay. Yeah. So what is the meaning of direct bill? So direct bill means there is a direct relationship between the insurance company and the customer regarding the payment. You can see insurance company will you take the policy from the insurance company directly. There is no any involvement of any agent or agency. Okay, you got the invoice, you make the payment, and payment will go directly to the insurance company. Okay, now here, like suppose that you are taking insurance from HDFC Life or LIC. So if you are taking directly from LIC website or portal, you take the policy, you will get the invoice, you need to make the payment, that amount directly will go to the LIC. Okay. So there is no any commission or producer involvement here. Okay, if there is an external commission could be there, so it is the insurance company headed what rate they are what amount they need to make the payment. Billing center will not take any attention of that commission. Okay, this is called as a direct bill policy. Okay. Now list bill. So list bill is one example. So not list bill. Now coming to agency bill. So agency bill. So agency bill means suppose that you are taking the LIC policy from the policy bazaar. Let's assume. Okay. So what you do, policy bazaar, you search the policy. Then after it will show lots of policy detail, lots of insurance will be there. Insurance company, HDFC, LIC, ICICI, lots of option will be there. Lot of option. You need to select one and you can carry. So here policy bazaar act as an agent. Correct. Okay.
Yes.
So policy bazaar, you are taking from policy bazaar, but the main company is like LIC or ICICI or HDFC. Now policy bazaar will take care of everything. So what would happen? Policy bazaar will send you the invoice. That invoice is sent by the policy bazaar. Now you need to make the payment of policy bazaar. Now policy bazaar will at first take their own amount commission, then the remaining amount it will pay to the insurance company. This is called the agency bill. Nothing. Now it is clear to you?
Yes. Yeah.
Yeah. So difference between direct bill, agency bill, you just make the payment directly to the insurance company because you have taken directly for the insurance company. If there any commission, insurance company will take care of this. But agency bill, state invoice you will get from the agency. That agency could be any company, any organization, anything. You need to make the payment both policy premium plus commission. Now that agent will take their commission and remaining amount they will pay to the insurance company. So that is agency.
Okay.
Okay. Now coming to list bill. So list bill is little bit complex. Again, 1 to 2% we need to work with the customer, your project is on list bill. Sometimes we need to work. So list bill is coming for the concept of mortgagee bank or any employer. I'm saying, suppose that you are working for any organization. Okay. So every organization given some health insurance or something insurance, correct? Medical insurance or something for every employer, correct? You will get
Yes.
one insurance from your company, but you are not making payment for that policy, correct? It will be deducted from your salary, that is different thing, but you are not going to make the payment of the policy. Your company is paying the amount on behalf of every employee. Okay, so that concept is called as a list bill. Like one company is there, 100 employees there, they will get the one invoice for all 100 employees, and whatever the amount will be there, like $2,000 or $10,000, they will make the payment. Okay, and each employee also will get the invoice, but you no need to make the payment for that invoice. So that is called as a list bill. Okay. So this list bill concept is where any employer, like worker comp policy, you need to work in this PNC, property and casualty, or worker compensation LOB is there. That would be for list bill.
Okay.
Okay. Now policy transaction. So what is the policy transaction? So whenever we are creating any policy from policy center, the policy transaction is flowed from policy center to billing center as a billing instruction. Billing instruction will be having the detail. Now, what are the policy transactions? So, policy transaction means whatever the activity you are doing, that is called as a policy transaction. So, first time whenever you are creating any policy, that is called a new business or policy issuance or policy submission. That is called as a new business, policy issuance or policy submission. Means first time new policy when you are creating. So whenever you got any requirement like new business, policy issuance or policy submission, you need to think like this is the first time policy is going to create. Okay, so that is called as a submission transaction or issuance transaction or new business transaction. Okay, clear this one?
Yeah.
Yeah. So every time whenever you doing some testing or something, at first you need to create a new policy. Correct. At first you need to create a new account, then new policy. So new policy means first time it is mandatory to do the new business or submission. So this will create the new policy. That's it. This is called as a submission. Then after submission, either you can do the policy change or cancel the policy. Correct. Because if the policy is not created, to which policy you are going to cancel. Correct. So at first submission is required. Submission transaction is created. Amount will come. Okay. Then after, if you want to do policy change, so what is policy change transaction? Suppose that today you are going to take one policy. Okay, that policy you have taken. One second, I'm getting one call.
Okay.
Yeah. So suppose that today you are going to take one policy on behalf of your car. Let's assume. So first time they will take the detail of your car, like in which year you have purchased the car. This detail you need to fill into the policy center. So you need to fill the when you have purchased your car. What is the driver experience? Who is the driver? Okay. So on behalf of all this, first policy will be created. Policy submission will create the new policy. So total coverage amount will be calculated. Let's assume $800. It has been it comes through the policy center. This coverage amount calculation is done through only policy center because some rule is there. Okay, that is called as a rating. So rating is some rule. After the doing some calculation, as per your car model, car age, driver experience, they will calculate the coverage amount. So if it is coming $200, it should display the $200 in billing center also, the charge amount. Okay. After some day, like after 1 month, suppose that you have changed your driver. So if the driver age, like experience is less or more, on depending upon that age also or experience also, the coverage amount either can increase or decrease, correct? Because insurance company will increase or decrease that amount. That is called as a policy change. So if there is a decrease or increase any amount of the coverage, that is called as a policy change transaction. So in policy center, there is an option to do the policy change after creation of the submission. Just click, I will show you that transaction, how we will do that one. So just do the policy change and then you need to give the amount or whatever, that same amount it will come into billing center. So this is called as a policy change transaction. Any question here?
So it's called policy chain transaction, is it? Or change?
Policy change.
Change. Okay.
Yeah, policy change. You are changing the policy, changing the amount
correct.
of the policy. Coverage amount.
Yeah, in policy center, we learned that policy change can be done for various reasons, like as you mentioned, change of driver or change, addition of any, things to be added extra and things like that.
Anything. Yeah, any region. Billing center doesn't know the region. Billing center only know the amount, correct? Because billing center deal with the amount. So any increase or decrease the amount is for the that policy. It is called as a policy change. Okay, region could be anything. That doesn't matter. If submission comes for $200, if change comes for $40, so it will be $240 in billing center. If it is come minus $20, so it would be 200 minus 20, $180. So billing center only charge will come as a amount and transaction. What is the transaction? Like submission, change. These two things will flow into billing center. Okay.
Fine.
Okay. Yeah. Then after cancellation. So cancellation, as you know, there are two type of cancellation, either automatic cancellation or manual. So manual cancellation means you can do simply cancel through the policy center. Okay. I think you have heard about the cancellation, how you do the cancellation from policy center. So same like policy change, there is option. Just select that policy and click on cancel policy, it will be cancelled. So that is called manual cancel. So when you are doing the cancellation, again one cancellation transaction will flow to billing center with the cancellation amount, whether it is $100 or $120, and that will be negative because you are cancelling the policy. Okay, so this is called as a manual. And automatic is triggered through the billing center. When you are not making the payment for any invoice will be due, delinquency will trigger. Then after grace period, again you are not making the payment, it will automatically cancel your policy. So that is called as a automatic cancellation.
Okay. And any cancellation transaction of money is taken care by billing center only.
Yeah, that money will come into billing center as a cancellation transaction, then it will be adjusted. Let's assume today you have taken one policy, $200. After 10 days, you want to cancel the policy. Okay. So what amount it will come? So for 10 days, they will take the charge because you have used the service for 10 days. But for remaining period, they will not take the money. So for 10 days, suppose that $50 for 10 days. So cancellation will come as a $150 negative. So 200 minus 150, $50. Only you need to make the payment of $50. So this is about the cancellation cost. Okay. Now after cancellation, suppose that somehow you're not able to make the payment, policy is cancelled. After cancellation, you can reinstate the policy. That is called the reinstatement transaction. So reinstatement transaction means again same policy will be there. Everything will be same. Terms and condition, every detail of vehicle, everything will be same. Only you are reinstating that policy after the cancellation. So if you want to continue the policy after some day and the policy is getting cancelled, so you can reinstate the policy. So reinstate again either through policy center, but the mandatory criteria of the reinstatement means your policy should be cancelled, then only you can reinstate. Otherwise, you can't reinstate the policy. So once it is cancelled, you just click again action, reinstate transaction, it will reinstate same. Everything will be same.
Okay. In your screen, I'm able to see only till cancellation. Are there points below that?
No, only cancellation. Here we mention only 3 or 4. Okay.
Okay.
So you can take the, they are giving this recording to you.
I think so. I mean, I didn't check yesterday, but they should be.
Okay. So this is the reinstatement. So reinstatement means after cancellation. Then coming renewal and rewrite. So renewal means once the policy is expired, then if you want to continue the same policy next year also, okay, so you can renew the policy. So renewal condition will be policy should be expired, then only you can renew the policy. Okay. So first time when you create the policy, P term 1 will be created, policy term 1. When after second year, if you renew, so second term will create. Then after third term, fourth term, like this, policy will be renewed. Okay. And one more is the rewrite. Yeah, rewrite is there. Rewrite is also same like policy change, but policy change is changing the coverage amount, whether it is increasing or decreasing. But rewrite means if you are changing some terms and condition and some terms and condition or some payment plan you are changing or billing plan you want to change. Suppose that today you have taken your policy, you want to pay as a monthly, but after 1 month you decide no, I can't, I will not pay as a monthly, I want to give as a half yearly, means 2 times only, or annually 1 time. So for that policy change will not work. For that you need to rewrite. So rewrite transaction will allow to change the payment plan. Okay, so payment plan you can change to rewrite transaction. That is called the rewrite. Okay, so this is a 5 or 6 type of transaction. Everything will be there in policy center, or in billing center also we can do, no problem. So this is about the transaction. Yeah. So again, I say told you, whenever you are triggering any transaction, then only it will send into the billing center. Means if you are submitting the policy, so it will go to billing center. If you are changing the policy, so every transaction will flow into the billing center. But you need to do at least one transaction, which is mandatory, which is called as a submission. Submission is mandatory transaction in first transaction. Okay. Now payment plan. So as I told you, like there is a payment plan. As per as the payment plan, charges will be splitted. Yesterday also I told you. So payment plan means again quarterly, half yearly. If it is quarterly, so 4 times it will be there. If it is half yearly, then 2 times. Two invoice will create. Charges will be splitted into two parts. So payment plan generally is defined into billing center, and through that payment plan, whatever payment plan is you are selecting from policy center. The actually payment plan is the part of billing center, but in policy center it will display whatever you mention into billing center admin data. So that admin data it will flow, and in drop down you can select the payment plan. All the payment plan will be there. You can select anyone and you can go. So payment plan is generally used to split the charges into invoices. Okay. So this example yesterday I spoke like how this splitted has been done. So at first charges is splitted into invoice item, then invoice item is merged with the invoices, because invoice is having the bill date and due date. So you need to make the payment on the bill date or before due date, otherwise your policy will be indelinquent. Okay. And first installment, every time first installment is called as a down payment. Okay, here in billing center, if your charges is split into 4 parts, let's assume. So first it's called as a down payment, remaining 3 will be installment, because every time you need to make some down payment amount, correct? And that down payment having the premium, taxes and fee. Okay, so premium will be split into 4 parts, but taxes and fee will be merged into down payment. That's why down payment will be a little bit more than the installment amount. So why the first is down payment? Because every customer need to make some down payment, whether it is 30% or 20%, whatever the amount. That's why the first invoice will be the down payment invoice, which is having the bill date as a today date, because today you are purchasing the invoice, purchase the policy. So it will be having the bill date today and due date after 10 days or 15 days. So that is called as a down payment. So every time first invoice will be down payment and remaining will be installment. Okay. Now, whenever the charges is split into any invoice, as you can see, invoice will be having some bill date and due date. Now that bill date and due date, so yesterday we have seen bill date and due date are fixed. So if the bill date is today, due date will be after 10 days for every invoice. So that due date is coming from the some billing center. We need to define that plan into the plan, like billing plan. If you define 10 days, then there will be a gap of 10 days of bill date and due date. If you define 20 days, so there is a gap of 20 days. Okay, I will show you into the billing center application. So this gap of bill date and due date will be totally depend upon the customer. If customer want to put the gap of 10 days or 20 days or 30 days, the developer need to define that amount, that days into the billing plan, and that requirement you need to mention into the story card. Okay, so these all values are coming from the setting only, administration part of the billing center. And for a producer payment, as I told you, like whenever it is direct bill policy, so only your task is to make the payment of the premium amount. The commission amount is taken care by the insurance company, and that is done through the batch, which is called as a producer payment batch. So there is a batch when the insurance company will run automatically producer payment batch. It will automatically send the amount to the producer to whom the policy is met. Every policy is met with the producer, whether it is direct bill or agency bill. But if it is direct bill through batch, the amount has been paid to the producer or commission. Okay. Now, so every invoice, whenever the invoice has been created, this is the most important part of the billing center invoice. So whenever any invoice has been created, invoice having three status: plan, bill, and due. Okay. So whenever first time the invoice is created, the invoice having, suppose that today we are creating one invoice, so the invoice will be in planned status. Okay. First time it will be in planned status, and that invoice will have some bill date and due date. So suppose that if the due date is 11th Feb, let's assume bill date is 11th Feb and bill date March is there. Suppose that due date is 11th April, let's assume, and bill date is 1st April. Okay, so initially it will be in plan. As we reach into the 1st April, when the date is moved to 1st April, one batch is running every day. The batch is called as the invoice batch. The name of the batch is invoice batch. You need to run manually to test this scenario. Okay, so when you run the invoice batch, okay, it will run automatically whenever it is production or live. But for our testing purpose in QA environment or dev environment, there is the option to run that batch manually also. Okay, so on the bill date is on 1st of April. So as the date is reached to 1st April, when we run the invoice batch, the status will change from plan to bill. Okay, as soon as the status is changed plan to bill, one statement will be generated, and that statement will be sent to the customer. Okay, by mentioning the amount, like $50 is the, you need to make the payment for $50 amount, which is having the due date of 11th Feb. If you are not making the payment within 11th Feb, your policy will be cancelled. This kind of information, this statement will be sent to the customer. Okay, so you need to remember two things here. First, the status of the invoice. So three type of status: plan, bill, and due. First time when the invoice is created, it will be in plan. As soon as it reached on bill date, like here the bill date is Jan 15, it is written. Let's assume. As soon as you reach on 1st April, if the bill date is 1st April, invoice batch will run and it change the status from plan to bill. Okay. Now, if the due date is 10th Feb, as soon as it reach the due date plus 1 day, means after due date, like 11th Feb, it run one more batch, which is called invoice due batch. So invoice due batch change the status from bill to due. And as soon as the status is getting changed and there is any amount, due amount greater than 0, delinquency will be triggered or policy will be cancelled. It is clear to you or any question?
It's a little confusing, but I'll go through that again.
No, you can ask me. If you are getting any confusion, you can ask me. So I'm repeating again. Yeah, tell me.
First is the planned one, and then there is a bill date. So the invoice is generated on the bill date.
No. Invoice is not generated. Invoice will be creating. Yeah. So as soon as you create the policy, like let's assume you are doing submission or new business, as soon as you create it, charges will be split into invoice. So you can see below 6 invoice is there. So 6 invoice will be there. Like second Feb, 25th, second March, 20 March. This is bill date and due date. Let's assume today is 1st Jan. Let's assume. So if you are taking the policy, creating the policy 1st Jan, so if the bill date is, so invoice will be creating, okay, as soon as you create the policy, but there will be bill date and due date. So once it reaches on the bill date, invoice batch will run and it change the status from plan to bill. Earlier it will be on before second Feb, it will be in planned status. First invoice I'm talking about. Before second Feb, it will be in planned status. As soon as it reached on second Feb, clock move to second Feb or date move to second Feb, invoice batch will run and it change from plan to bill. Okay.
Okay. Yeah.
Okay. And that time the real statement, customer will get the real statement to make the payment. Otherwise, how customer will know that? Like how many amount, how much amount I need to make the payment, what is the due date. So as soon as you bill, and this is done through the backend, you no need to worry about it. Okay, it will be done automatically. Billing OTB code is written in such a way. As soon as it change from plan to bill, customer will get one statement. Okay. Our job is to run the batch. That's it. So we plan to bill on the bill date and from bill to due on the due date plus 1 day, because up to due date they will wait, system will wait for the payment. Whether payment is done or not, it will change the status due. Just remember this thing, this is very important. Where payment is done or not, if the today's date is 21st Feb, invoice due batch will run automatically every time, or manually you can also run. But the status will change as a due. Status will be keep changing irrespective of the payment. But if there is a due amount, then delinquency will be triggered or policy will be cancelled. If there is no due amount, nothing will happen. But the status will keep changing on their date. Bill, it will be changed to billed on bill date. It will be changed on due date plus 1 day. Okay. Clear this one?
Yes, now it's clear.
Yeah. So I will, when I take the session on the invoice, I will show you the screen how we need to run the invoice batch, how it will work, everything. So that time also it will be more clear to you when you see the real time scenario and all. Okay.
Correct. Correct. So when do we start working on that billing center?
First I'm giving overview so that basic will be clear to you, so that I can go through that screen quickly and I can show you. Okay.
Okay.
Basic concept should be clear.
Correct.
1 or 2 days, after 1 or 2 days, I will come to the data application.
Sure.
Yeah. So this is about plan, build, and due. So status will be keep changing whenever the date will come and invoice batch will done. That's it. Okay. Now delinquency also I have discussed yesterday. So delinquency, once the invoice due batch is running and the invoice status change from bill date to due, bill to due, and there is a due amount. This is very important condition. If there is a due amount, then only delinquency will trigger. Otherwise, delinquency will not trigger. Due amount will be there if you are not making the payment. If you are making the payment, there will be no due amount. If you are not making the payment, there will be due amount. So the condition of the delinquency is like invoice bill should be due status and there is a due amount. So delinquency will trigger, and once the delinquency trigger, it will take care of that later part. Like it will send the notification to the customer like your amount is due from long since this date. You need to make the payment to this date, otherwise your policy is cancelled. So then after it, again they are not making the payment, the policy will be cancelled and amount will be collected. If there is a amount is there, the collection team will collect the amount, the remaining amount. So that is handled through the delinquency. Okay, so billing center one functionality is called delinquency. So these all three, after past due scenario, overdue, past due, if the amount is there, the amount, so delinquency will take care of this. Due amount is there. Okay, and this delinquency is handled through workflow. Workflow is a logic which developer need to write. So that is handled through the workflow. Okay, just only you need to know about the workflow is there. That workflow will map with the delinquency. Whatever the workflow step is there, same step will display into the delinquency screen. So workflow is the backend, but you need to know as a BA. Okay, So whatever the step will be there, same step will be showing into the UI. So workflow is the backend part of the delinquency. Okay. And this is about the billing issues. So trouble ticket. So I hope you remember about the trouble ticket. So trouble ticket, whenever any issues is generating into billing center, to handle that issues, we need to create the trouble ticket, and trouble ticket will be assigned to some person so that that person will take care of that issue, whether how when it needs to be resolved. Otherwise, your policy will be on hold. Nothing will happen. That's why trouble ticket will need to resolve as soon as possible. As soon as possible. Okay, so this is the role of the trouble ticket. This is not so important, but little bit important. Some tasks will come to trouble related to trouble ticket also, some requirement or not. So you need to know about that. Okay, so I hope today you have some detailed idea about the billing center.
Yes.
Okay. Yeah, from tomorrow onwards, I will show you the account policy, how to create account policy and everything. Yeah.
Okay. So the trouble ticket is basically handled or all the transaction of trouble ticket is done in billing center, right?
In billing center, if there is any issue is coming, if any exception is there, like bank account number is not correct, credit card expired, so some this kind of scenario, somebody got need to generate.
Okay.
Yeah. Or if suppose that there is a transaction of $1 lakh, this is a huge amount. So they want to generate the trouble ticket so that the person to whom it is assigned, he knows that there is a transaction of $1 lakh. 1 second, I'm getting one.
Okay.